And then, of course, there's the evolution of our average selling price, which continues to trend upwards as we move into newer orders and also launch things like our Max Pack, our largest battery pack.
In the ever-evolving landscape of electric vehicles, EVs, Rivian Automotive Inc. has emerged as a trailblazer, riding the waves of surging demand that not only elevate the company's financial standing, but also reshape the dynamics of the entire EV market. The heartbeat of this transformation lies in the notable upward trend of Rivian's average selling price, ASP, a phenomenon scrutinized and celebrated under the keen leadership of CEO RJ Scaringe. As the demand for Rivian's electric marvels continues its meteoric rise, the company's financial performance undergoes a commendable change, with losses per vehicle dwindling to $31,000. This surge in demand not only triggers an unprecedented increase in ASP, but also unveils a tapestry woven with various threads, including cost optimizations, governmental incentives, competitive market forces, and cutting-edge technological strides. So join us as we navigate the factors shaping the pricing dynamics of Rivian's electric vehicles, exploring how this surge in demand is not just transforming the company's financial landscape, but reshaping the broader narrative of the electric vehicle market. In the face of broader concerns about the demand for electric vehicles, Rivian Automotive has boldly raised its production target for the year by an additional 2,000 vehicles, reaching a total of 54,000 units. This optimistic move, driven by sustained interest in their trucks and SUVs, caused a 4% surge in Rivian's shares during a rollercoaster ride of after-hours trading. In an automotive landscape grappling with the 1-2 punch of surging inflation dampening consumer enthusiasm and market leader Tesla slashing prices to spur demand, Rivian's upbeat forecast offers a glimmer of hope. Elon Musk, Tesla's CEO, recently voiced his worries about the impact of high interest rates on potential car buyers, a sentiment echoed by giants like General Motors and Ford, raising fears of a demand slowdown. Contrary to this cautious trend, Rivian CEO RJ Scaringe expressed surprise at the industry's reticence, stating in an interview with Reuters, "I think it's going to create, unfortunately, somewhat of a vacuum of products in the market." This statement comes as smaller rival Lucid takes a step back, trimming its production forecast to 8,000 to 8,500 vehicles for the year, down from an initial projection of over 10,000, aligning production with deliveries to navigate the current market dynamics. In this uncertain landscape, Rivian's bold step not only defies the cautionary trend, but also hints at a company confident in the sustained appetite for its electric offerings. But why is Rivian doing so well while others are failing? Rivian CEO RJ Scaringe spilled the beans on how the surging demand for their electric vehicles is cranking up the average sales price, ASP. In a recent chat, Scaringe underscored the steady climb in the average selling price as fresh orders keep rolling in. This upswing in demand isn't just a feather in Rivian's cap, it's also doing wonders for their financial health. The impact is crystal clear in Rivian's per-vehicle profits, with losses dwindling from a hefty $139,277 in Q3 last year to a much leaner $31,000 in the recent quarter. But it's not just about the numbers, it's about the positive ripple effect. The soaring interest in Rivian's electric wonders isn't just jacking up prices, it's a key player in the company's financial glow-up. Scaringe also pointed to cost-effectiveness in materials, slick upgrades at the manufacturing plant, and the magic of dealing with more units, all contributing to shrinking losses. Rivian's chief also couldn't help but shine a spotlight on their production prowess. With deliveries reaching new heights and a boosted production forecast for the year, it's clear that the market is giving a big thumbs up to what Rivian is putting on the table. Navigating the financial landscape, the impact of this demand-fueled price boost on Rivian's bottom line and profitability goals demands close attention. With the average selling price on the upswing, analysts are sounding the alarm for a critical need to trim costs. It's a delicate dance between riding the wave of heightened demand and tactfully managing expenses to secure Rivian's long-term success. In essence, the clamour for Rivian's electric marvels isn't just a cash cow. It's been a game changer for their financial report card, leading to a slimmer loss margin. Yet the real challenge lies ahead in turning this demand into dollars. It's a high-stakes balancing act, and the company's journey towards sustainable growth and financial triumph hinges on smart cost management. Another noteworthy driver in Rivian's success is the reduction in material costs, particularly in the realm of battery production. Advances in battery technology, coupled with a decrease in the cost of battery production, have effectively lowered the overall cost structure of electric vehicles. Government incentives such as tax credits, rebates, grants, and financial assistance have been pivotal in shaping the ASP of electric vehicles. By offsetting costs, these incentives make electric vehicles more accessible to consumers. Concurrently, competition among manufacturers, including luxury brands and emerging players, has influenced the overall pricing structure of electric vehicles. The expanding infrastructure of charging stations, coupled with advancements in battery technology and the availability of federal, state, and utility incentives, collectively enhance the appeal and affordability of electric vehicles. Environmental conscious, a broader range of vehicle options, improved battery capacity, and cost-effectiveness have fueled consumer demand for electric vehicles, contributing significantly to the overall increase in ASP. In a recent earnings call, Rivian CEO RJ Scaringe asserted that the company is steering clear of price cuts to drive sales, emphasizing a methodical and thoughtful approach to vehicle pricing. This stands in contrast to other electric-only automakers such as Lucid and Ford, who have recently reduced prices on their models. Scaringe explained that Rivian feels quite comfortable with the positioning of what the company has done. The 2023 Rivian R1T truck starts at $74,800 and the R1S SUV is priced at $79,800, excluding additional options like the mid-tier 135 kWh or the MaxPack battery. In contrast, Ford's recent price adjustments have brought the F-150 Lightning back into the sub-$50,000 range, with the Lariat 510A similar in specification to a standard R1T, priced at $69,995. Despite industry trends, Scaringe expressed confidence in Rivian's sustained demand, stating that the company also feels very confident in the continued backlog it has. This confidence in demand contrasts with reports of diminishing interest in EVs from other brands, showcasing Rivian's unique position and strong market outlook. While other electric vehicles face a slump in demand, Rivian stands out, boasting a robust order book that extends well into the next year. Although the company grapples with fulfilling R1S SUV orders, there are plans to accelerate production, with the aim of making the SUV the predominant volume in Q1 2024. Rivian CEO emphasized the company's commitment not just to scaling up production in their main facility, but also to driving down costs across the business as they navigate toward profitability. In Q2 2023, Rivian's revenue witnessed an impressive threefold increase, reaching $1.1 billion compared to the same period last year. Net losses also showed improvement, narrowing to $1.2 billion from the previous year's $1.7 billion. Looking ahead, Rivian claims to reduce operating losses further by the end of 2023, building on the positive trends seen this year. The company's proactive measures and strategic outlook are key in a market where others are grappling with challenges. Moreover, Rivian has set its sights on expanding its portfolio with the introduction of a more affordable SUV, the R2. Priced around $40,000, this offering aims to tap into a broader market segment. While the R1T and R1S may not see price reductions, the introduction of the R2 could contribute to an even more diverse and accessible lineup for Rivian. The company's ability to bring this vision to fruition will undoubtedly shape its trajectory in the competitive electric vehicle landscape. Rivian has also successfully sealed the deal on a sprawling 1,800-acre site that will produce the R2, located approximately 40 miles east of Atlanta. The Joint Development Authority of Jasper, Morgan, Newton, and Walton counties recently granted final approvals for the lease agreement, bonds, tax financing, and other crucial measures, facilitating the handover of the property for development by the California-based electric vehicle manufacturer. The ambitious plan is to construct a massive $5 billion, 16 million square foot facility on the leased property for the next 50 years. Situated just north of Interstate 20, the factory will be bordered by Highway 278, Darrell Drive and Old Mill Road. Rivian's goal for this facility is mainly to produce R2 vehicles with more accessible price tags, targeting a broader market. The company anticipates hiring 7,500 employees at the Social Circle site, with grading of the land set to be completed by the end of the year. The first phase of Rivian's factory is slated to manufacture 200,000 vehicles annually, with production scheduled to commence in 2024. A second phase, capable of producing an additional 200,000 vehicles per year, is expected to be completed by 2030. The new Georgia facility represents a significant step for Rivian as it aims to diversify its offerings and increase accessibility to electric vehicles for a broader consumer base. That's all from this video. What do you think will happen to Rivian? Is this success long-term or short-term? Comment below and please give this video a thumbs up and subscribe to our channel for more videos like this. See you in the next one.